Your derivatives exchange saw its activity triple in the wake of the FTX implosion, right? I guess the question to start with, is this people shorting crypto? What is the behavior there?
So I think the biggest thing is somewhat of a migration from centralized exchanges like an FTX to decentralized exchanges like dYdX, Uniswap, and others. At dYdX, we're proud to be one of the leading decentralized exchanges. Decentralized exchanges have become a pretty significant part of the ecosystem over the past few years. Currently, over $1 billion a day is traded on dYdX. That's still a relatively small piece of the pie in terms of the crypto markets overall, but dYdX and other decentralized exchanges are something that's really new and I think have been growing a lot in the past couple of years. And I think what's recently happened with FTX just underscores the need for what we're building.
I think the volumes have been growing immensely in your space, right? But it's still a fraction of what's being put through centralized platforms. When does that equation change?
I think it's going to take a long time. Right now, decentralized exchanges like dYdX, Uniswap, and others are roughly 5% of the entire market when it comes to overall crypto trading volume. And I think the thing we have to remember about decentralized exchanges is they're very new. They were just invented about 5 years ago or so. And only in the past 2 years or so have they become a significant portion of the crypto volume at all. I think if you're asking the question, when do decentralized exchanges become bigger in terms of trading volume than centralized exchanges on crypto? I think it's certainly a longer term play. I like to tell my team and everyone else, I think it'll be about 5 to 10 years from now. But it's certainly something that we're building towards. And I think it's certainly in the cards for the future.
We started this segment talking about Sam Bankman-Fried and how he's been speaking publicly. You know, he was trying to build trust in FTX. That trust is damaged. I guess my question is, you're seeing more business, right? But why should anyone trust you any more than trusting Sam Bankman-Fried?
I think the beauty of it is you don't have to trust me. You can just trust the code. Really how dYdX and other decentralized exchanges work is they're based on code, not humans or intermediaries. And that's kind of the magic of what we're building. You can look at our open source smart contracts on Etherscan, you can read our audit reports, and you only have to trust those. You don't have to trust me. I don't even have access to any of the funds. So something like what happened on FTX is literally impossible to happen on a well-functioning decentralized exchange like dYdX.
One of the reasons that DeFi, or more specifically decentralized exchanges, are kind of not more mainstream for bigger players is because of the compliance risks, right? There's always a risk of potential money laundering. How do you circumvent that issue?
So we run automated compliance checks on the protocol using a lot of data that exists on the blockchain, and we do this in partnership with third-party vendors. And I think the thing that's interesting about cryptocurrencies is they're both in some ways more private and in some ways more public than traditional finance. One of the beauties of dYdX and other decentralized exchanges is that everything that's going on is transparent. So you can see the history of funds that every address has used, and that's all data that can go into creating a robust compliance solution. And that's one of the things we're also pushing forwards.